Let's get straight to the trading action on the Dalal Street, where markets saw a 1% fall but managed to outperform peers. The Nifty managing to hold on to the 10,650 mark despite a 1% downtick. The Sensex shed 300 points in trade. Broader markets also falling in line with benchmarks. Midcap saw a 1% fall. That index ending at a 5-month closing low. The Bank Nifty ended 0.7% in the red despite recovering in the last hour. But there's cheer on Mint Street with the rupee gaining versus the dollar for the 6th straight day. So after rising to an intraday high of 71.36 versus the dollar, the Indian currency closed at the 71.48 mark. That is 15 paise up from the previous session's close. Now the RBI's decision to buy bonds via open market operations, OMOs, and increased foreign fund inflows have helped bolster the rupee in trade. Falling dollar as well as a fall in crude prices has also meant good news for the currency. On to the other big story that we're tracking a day after the RBI board meeting that signaled an uneasy truce between the central government and central bank and the government. Sources say the panel to review the RBI's capital reserve framework could be formed soon. Now, CNBC TV 18 learns that the government and the RBI will form a committee to finalize the transfer of surplus from the central bank to the government within 1 week. Sources also indicating that the committee will comprise of government officials as well as outside experts, and these members will be decided by the Finance Ministry as well as the RBI governor. Lata Venkatesh is here with her take on the outcome of the board meeting. Lata, we seem to have an uneasy truce in place as things stand, but what's the way forward now?
Well, you could say that on the one hand, the capital measure of Reserve Bank so far has been gone into by Reserve Bank appointed committees, the Malegaon committee, before that the Usha Thorat committee, before that the Subramaniam committee. This time it's going to be an RBI come government, so you could say that it's a bit of a setback for the Reserve Bank. As well on Basel, the deadline has been postponed. The PCA norms are going to come up again for review on December 14th. So all this, and especially if they are decisions of the board, then it's a little unpalatable for the Reserve Bank, because the board normally advises, doesn't decide, and that could be a little unpalatable. Be that as it may, for the rupee market, the big relief was that at least there's no adverse event, no resignations, as was earlier feared, and therefore you saw the rupee as the outperformer today. And because the rupee went as strong as 71.30, you saw even the bond yields falling and the bond prices rising in response. So good response from the rupee and the bond markets. But ultimately, they also fell prey to the global risk off. As far as banks were concerned, again, there was a little bit of positivity for some of the public sector banks like PNB, BOI and Union, which don't have to scamper for capital, because you have to meet the capital conservation buffer only on April 2020, not April 2019. So there was a bit of a relief in stocks like this. But overall, the PSU banks again fell to risk aversion, and also because in any case, the PCA norms were not eased, and therefore there was a mixed reaction to them. The rating agencies also came with mixed reaction. One of them said that it's a credit negative, that the amount of minimum capital is being reduced, so to speak, up until 2020. But CRISIL did not think so. It was only Moody's which was a little upset with it. CRISIL thought that anyway the minimum capital requirement deadline is only getting postponed. It's not being changed. Finally, on NBFCs, there was a bit of a disappointment that there was no special line of credit. Not many people expected it, but yet the stocks did feel the heat.
Right, Lata. Many thanks for joining us with all the details from there. And as Lata was pointing out, ratings agencies are divided over the RBI's decision to extend the timeline for banks to meet capital norms. Moody's believes the move is credit negative, but CRISIL is not too perturbed by that deferral.
Clearly, for banks, the more the capital, the better it is. And the starting point of the Indian public sector banks specifically is that they are very weakly capitalized. So the fact that in some sense there is a forbearance being given on the capital levels is a credit negative.
Regulatory capital requirement that has been prescribed by RBI, that is 1% higher than the global requirements. And even with this 0.625% reduction, we will still be 0.375% higher than the global regulatory capital requirement. And it's just a one-year time frame that the deferral has been made. It's not done away with.
Earlier today, Lata also caught up with Niti Ayog's Rajiv Kumar. She began by asking him about the timeline for the economic capital framework. Let's hear out what he had to say.
Nobody that I know of would want to weaken in any sense the central bank and its its capital reserves beyond any and leave and would want to make sure that it has the capital reserve that it needs plus a little more for the rainy day, as it were. The Reserve Bank of India is not accountable to the Parliament. It's only once in a while called to the standing committee, but the government in office is permanently accountable to the Parliament, and therefore if something misfires and if something for example, if the growth turns turtle in the country or if the inflation spikes, it's not the RBI management has ever changed.
And we also caught up with former Deputy Chairman of the Planning Commission, Montek Singh Ahluwalia, just a short while back. Now, he believes that raiding the RBI's reserves wasn't a credible way for the government to cut its fiscal deficit.
Well, post that 9-hour board meeting, it looks like a truce, if we may call it an uneasy truce, has been arrived at. Some decisions have been taken, but others have been postponed to a later date. December 14th is the next board meeting of the Reserve. To start with, what did you statement that was issued by the RBI in general, but specifically on the economic capital framework will together set up a committee issue, but we just heard there from the Niti Ayog Vice Chairman saying very clearly he believes that this will go into execution in this financial year itself.
Well, I mean, I haven't seen all these individual statements, but let me just say that, what looked like a conflict situation, I'm sure that financial markets welcome the fact that we have there's been a long board meeting, they've agreed to do certain things. There's not a sense of the RBI being pushed to doing things that it really doesn't want to do. On the other hand, I mean, it's clear that between the Finance Ministry and the Reserve Bank, historically, I mean, there's always been a certain amount of tension. I don't think anybody minds that. This needs to be managed in a way which doesn't look as if the system is breaking down. And I'm glad that the way things have turned out, nobody is saying that the system is breaking down. Let's see what they do in the future.
Actually, if you read the press release at the end of the meeting clearly says the board, while deciding to retain the CRAR at 9%, agreed to extend the transition period to implementing Basel rules to April 2020, etc., etc. But the point is the board decided that the capital adequacy will be 9%. This introduces a new player. Until now, we never thought that the RBI board would, try and decide how much capital adequacy has to be maintained, or what kind of banks should be constrained because they are weak. We thought this was left to the technocrats at RBI. Now that the board is an active board, should we genuinely start worrying about the composition of the board because it is such an important actor?
No, that absolutely goes without saying. I mean, if the board is not a purely decorative organization, which for many years it has been, then it's extremely important that the composition of the board and the competence and the background of the people on the board is very carefully worked out. There's no question about that.
Now, the CBI versus CBI case took a dramatic turn today with the Supreme Court coming down hard on Director Alok Verma, who has been shunted by the CVC. Upset over the purported leaks to the media, the Chief Justice said attempts by the court to protect the institutions have been defeated. The hearing in this case has now been adjourned to the 29th of that month. Ashmit Kumar was in the courtroom as the action unfolded. He joins us now with all the details. Ashmit, what were these leaks that have irked the court?
Well, full theatre as far as the Apex Court is concerned. One was not expecting the outbreak that we saw today. One was expecting arguments to take place between the two sides. But the Apex Court, led by the Chief Justice, Justice Gogoi himself, would have nothing of it. Now, keep in mind that there was a lot of wordplay. There was a lot of joining of the dots, given that there weren't any explicit references made to very specific leaks. There weren't explicit references made to certain articles or publications or to certain persons. But at the same time, through very thinly veiled references. Justice Gogoi made his position quite clear. He made it clear to both the counsels from either side that he's not happy with the leaks. He's not happy with how the leaks documents have been shared. It seems to have been shared with certain agencies. He also made a thinly veiled reference again to M.K. Sinha's petition, which in fact details a great deal of intervention from the government, even mentioning Ajit Doval from the NSA as to how he had been interfering with the CBI. And in response to all of this, Justice Gogoi's assessment was that the judiciary is not a platform for airing of these views. It's a platform. It's a forum for adjudicating on people's rights. He went on to say that he's seeking to maintain the respect of the institution, the CBI, but people are not complying, that this is extremely disappointing, and that he will look to set things right. He will look into the matter, and on the back of that, coming out with a very sharp observation that none of the parties appear deserve to be heard as of today. And on the back of that, what he's done is that he's deferred the hearing until November 29th on the back of these sharp words, reprimanding counsels from both the sides, essentially taking exception to these leaks. Now, what is the implication? What does it mean? It's open to speculation right now, but more clarity is awaited, and November 29th perhaps is when we can get some from the apex court on the road forward as far as the CBI battle is concerned. Back to you.
Right, Ashwin, many thanks for bringing us all the details from there. And the Yes Bank stock tanked over 6% in trade today. That on the back of the independent director R. Chandrasekhar's resignation from the bank's board late last evening. This is the third person to put in his papers in less than a week. Sources telling us that the discomfort over the handling of recent events is one of the key reasons behind that move. Ritu Singh broke that story, and she's here with all the details. Ritu, what else are you picking?
Well, R. Chandrasekhar's resignation marks the third exit from the board of Yes Bank in less than a week. And that exit, we understand, is not due to personal reasons as initially indicated by the bank, which has now revised its statement and removed the words personal reasons from the release. Now, sources indicate that R. Chandrasekhar, in his resignation letter, expressed deep concerns about recent developments at Yes Bank and dismay at the manner in which the bank has dealt with these issues, and conveyed to the bank that the environment was not conducive to him staying on any longer. Now, what are these concerns that he is referring to? We understand from sources that since the time that the RBI sent a letter to the bank cutting short Rana Kapoor's tenure as the CEO, there has been friction between the existing CEO and some of the board members on matters relating to the transition, where the bank had sought an extension for Rana Kapoor, and even the process of selecting a new CEO. So sources pointed out that the circumstances under which both Ashok Chawla and Vasant Gujrati left the bank, as well as O.P. Bhatt's resignation from the search and selection committee, were all seen as worrying developments by R. Chandrasekhar. But the biggest concern yet for him was the independence of the board, which we understand under the existing leadership is something that he was worried about. Rana Kapoor also, we understand, wrote to R. Chandrasekhar asking him to reconsider his decision and at least serve as director until April 2019 in the interest of stability of the bank and also to avoid any adverse market impact. But R. Chandrasekhar declined that request and put in his resignation.
Still with us on Reporter's Diary. Now, Ola drivers may soon start delivering groceries to your house. This if the cab-hailing company goes ahead with its plan to enter the online grocery segment. Sources telling CNBC TV 18 that Ola cabs will begin a pilot project in Bangalore in January. Priya Sheth joins us now with more details. Priya, this seems like Ola's in a diversification drive, so to say.
Well, after Amazon and Flipkart, we understand that Ola is planning a big bang foray into the grocery space. Now, here's how it's going to happen. We understand that Ola Cabs is likely to begin this grocery pilot in January 2019, starting with the city of Bangalore before moving to any other place. Now, this foray will happen via the Panda platform. Do remember that Ola Cabs acquired Food Panda in December 2017 and have been looking at scaling it up aggressively. The business is likely to be integrated within the Ola app, which means a consumer can place an order for grocery via the Ola app directly. Now, at this point in time, the company is exploring tie-ups with wholesalers as well as retailers, and this will ensure that the company gets better margins as well as far as delivery is concerned. Now, in the first phase of this rollout, Ola will begin with non-perishable segment before moving to fruits as well as vegetables, and the stores will serve as pickup points for several of the groceries. Now, at this point in time, the company is in the process of hiring several more delivery boys and Bangalore, specifically with regards to Food Panda, and this will help them scale the reach as far as deliveries in the city of Bangalore are concerned. Now, we did reach out to Ola as far as our query is concerned, and Ola refused to comment on our query.
Right, Priya, many thanks for bringing us all the details from there. But the ease of doing business in India this year remains the same as last year. That's the key finding of a survey done by the United Kingdom India Business Council. Anu Sharma spoke to Richard Heald, the CEO of the council, on some of the key findings in that survey.
I agree with that. I agree about this specific company, which you may or may not know is actually Diageo. And it does, every year, have to obtain somewhere in the region of 250,000 licenses, which is not a terribly good situation for either India or itself. And we use that as an illustration as to, in part, to show why we're recommending in this report that the e-biz window for approvals, which is at a central government level, should be actually expanded to the states and to departments. And clearly there is work that still has to be done.
And what about taxation? That has remained a constant irritant of sorts.
Nobody likes to pay tax. But yes, I think that taxation remains an issue. Again, you're seeing digitization coming in. But I think what we're looking at here is consistency of application. That is what people are looking at. And again, it feeds back into the bureaucracy and improvement of general systems. And application of taxation on a more consistent basis, I think, is something that people would like to see.
What are the specific issues on FDI on which UK companies are facing problems?
Well, I think FDI has been liberalised quite significantly. I think that even in areas of sensitivity. But if you look at issues like in insurance, for instance, where there is a 49% cap, if you look at areas such as food retailing, on a pan-state basis, there remain issues there. We've not seen the rollout of FDI in a way that I think the government hoped when it introduced its liberalisation. These are areas and sectors where the UK industry is particularly keen to become involved, to invest in India. And we'd like to see some degree of liberalisation around those, or at least regularisation around them, which would allow UK companies to benefit and to invest more in the UK. So those are the specific areas where I think there is focus.
There is also a barrier when it comes to finding a suitable partner. Is that an issue of trust or competence?
I think it's a combination of both. And if I can say that probably you spend 90% trying to establish the trust and 10% looking at the competence. Because if you don't trust the person that you're dealing with, then whether he's the most competent person in the world or not is largely irrelevant.
What are the kind of investments that are in the pipeline?
Well, I mean, two of the areas that I think are very much in the focus as far as UK companies are concerned. One of which is technology, and that's a very broad, but I'm thinking of areas in fintech, agri-tech, ed-tech, med-tech as well, but particularly ones that evolve around data, big data analytics.